Close look at big tech with the generals hurting right now to lead. We've got Meta up, Nvidia still a bit. Joining us, Melissa Ottos, TMT analyst, S&P Global Visible Alpha. Melissa, thanks for being here this afternoon. These are still the high-quality companies in our market, right?
Thanks, Oliver. Indeed. I mean, this earnings season is going to be an exciting one. We're excited to hear what the guidance is going to look like for the second half and how expectations come in.
The AI trade, how high is the bar here, especially when we think about the impact on some of the hyperscalers, those that have been spending so much to buy Nvidia chips? It's like we know Nvidia is going to put up big numbers, but for Microsoft and for Amazon, like, do they have to start delivering major product?
Yeah, this is the million-dollar question. What's going to ultimately drive broad adoption? I think coming into this quarter, based on S&P Global Visible Alpha, I think what we're looking for at companies like Microsoft, Google, Amazon, Nvidia, is we're looking for them to beat expectations. Now, on Nvidia specifically, one of the most interesting stats in our data that I can point to is how the upward revisions for 2025 expectations have been moving this year. So far this year, upward revisions for 2025 based on S&P Global Visible Alpha consensus have come up $85 billion. That's quite significant and a very compelling number. The big question now is, okay, that's happened in the first half. What's going to happen in the second half?
Nvidia stock has been experiencing a pullback, which came as a result of investors fearing the company's future amid the rising tensions between the United States and China, leading to a massive sell-off. But one major investor is still seeing the big picture and refusing to let go of Nvidia just yet. One of the most renowned investment firms, Ray Dalio's Bridgewater Associates, has recently doubled down on an already enormous position in the chipmaker. But why has this $3 trillion behemoth become such an enticing bet for the hedge fund? And what does it mean for the everyday investor? Stick around as we delve into the details and unravel the mystery behind Bridgewater's big bet. But first, if you want to keep up with Nvidia latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Volatile week for the chips. SMH below the 50-day for the first time really since May. Let's get to Seema Modi with the breakdown. Hey, Seema.
Yeah, the sector down about 2% today. Carl, number of strategists weighing in on the sell-off in semiconductors. Julian Emmanuel's team at Evercore ISI chalking it up to the sell-off of 2023 winners and uncertainty around the election with growing bipartisan support to crack down on chip sales to China. Those two positive earnings reports from chip players ASML and Taiwan Semiconductor failing to provide a lift to the broader chip stocks. That was a telltale sign. Though Wedbush Securities writes that the Trump trade is not a big negative for the AI thesis. Analysts there remain bullish on Nvidia. Their price target is $120, is currently trading at $119 a share. It follows a report last night that OpenAI is in talks with Broadcom to develop a new AI processor. Some analysts, though, finding opportunity in this wreck. Morgan Stanley upgrading ARM holdings to $190 from $107 a share. Shares are up about 2.5% right now. And next week, we will hear from NXPI, Texas Instruments, among other semiconductor stocks.
Bridgewater Associates, led by the investment luminary Ray Dalio, isn't known for making random, haphazard decisions. It's an organization that garners attention for its calculated and often highly profitable strategies. Last quarter, the hedge fund held roughly 2.7 million shares of Nvidia. Imagine the financial juggernaut it must see in Nvidia to double that stake to roughly 7 million shares, worth over $600 million. At a time when Nvidia's stock has soared to over $120 per share from a split-adjusted $50 in the third quarter of 2023, Bridgewater's continued investment raises eyebrows. Nvidia is now the fund's fifth largest position, so it's clear that Dalio and his team are confident in the company's prospects. But why exactly does Bridgewater hold Nvidia in such high regard? It's simple. Nvidia is positioned at the epicenter of the global AI revolution. Over the past fiscal year, Nvidia's revenue has more than doubled, and its earnings per share skyrocketed by over 600%. Its GPUs have become the hottest commodity for AI developers worldwide, resulting in NHL teams hitting fewer targets than Nvidia's revenue growth percentages. To illustrate, let's consider the most significant metric. Its GPUs, the NE plus Ultra for AI workloads, dominate the market. Nvidia's current share of the AI chip market is estimated to be between 70% and 95%, depending on whom you ask. Likely skews higher if you're asking Nvidia, understandably. And while competition is not so much breathing down Nvidia's neck as it is gasping for air, Jensen Huang, Nvidia's CEO, admits he's worried and concerned about staying ahead. An admission that perhaps humanizes the tech giant more than its silicon creations do. One might suspect that Dalio has a time machine, or at least a high-definition crystal ball given this radical investment in AI via Nvidia. But let's not tarnish his golden reputation just yet. The data backs him up. And we're going to get right into why his move is absolutely justified. Hello, everyone, and welcome back to Investocracy.
Tech and discretionary now becoming the laggards. And while much has been made about the rotation out of tech and into small caps, my next guest says if we're in an AI bubble, it's still early days, and the Mag 7 will likely continue to gain over the next 12 to 18 months. Joining me now is Samantha McLemore, Chief Investment Officer at Patient Capital. And Samantha, it's great to see you again. Welcome back.
Thank you, Kelly. It's great to see you. Thanks for having me.
Yeah, you've got stocks and names and thoughts in all the areas that I think our audience is going to want to hear about. Let me just start with perhaps an unexpected place for some, which is Nvidia. I mean, you were involved with this stock actually pretty recently. What are your thoughts on the valuation and what's going on kind of more broadly there?
Yes, it was an unusual purchase for us. Normally, we like to buy names down, not up, but I think we saw anchoring in Nvidia. So obviously, Nvidia's results over the past year have been astounding, tripling earnings. And coming into this year, it was trading at only 25 times forecast earnings for the next year. People were worried that it was the next Cisco and that earnings weren't sustainable. When we looked at the business model, we didn't think it was just a hardware business. We thought it was hardware, software, platform dynamics, and we thought it could perform over the next 25 years more in line with Microsoft, which implied a value much higher. So we've paid $550 pre-split. We thought it could easily be worth $900.
Wow.
Now they've continued to beat earnings, so we think it could be higher, but it's hard to make a real case that it's undervalued in here. We still think it can earn market-like returns.
So it's kind of just a hold for you now.
Yeah, we like to let our winners run and hold it. I mean, we can still get higher values if you believe operating margins are going to be, anywhere in line with current operating margins.
According to Gartner, AI-specific chip spending is projected to grow by 33% this year alone. If Nvidia captures just a fraction of that growth, it translates into billions of additional revenue. Furthering Nvidia's case is its diversification within the AI landscape. Though it initially garnered a reputation for gaming GPUs, Nvidia now generates a significant chunk of its revenue from data center GPUs, nearly 87% to be precise. These aren't mere quarters falling out of an arcade machine. We're talking about serious revenue streams powering AI applications globally. Even if gaming had to hit pause, the forward march of AI ensures Nvidia stays in the lead. The financial data offers a compelling tale. In fact, Nvidia's revenue for the first quarter is $26 billion, up 262% from a year ago, driven by its AI-centric data center segment, which alone made up $22.6 billion. That's more than just a fiscal flash in the pan. It's a trend likely to put Nvidia on a perpetual winning streak. Yet, it's not all smooth sailing. Nvidia stock has experienced some turbulence, trading sideways over the past month, and even taking a slight dip following its ambitious 10-for-1 stock split in June. Investors briefly rotated out of tech stocks and into the safety of blue-chip value stocks, causing some undue hand-wringing. So, should investors go all in on the Nvidia stock dip, or avoid the stock completely? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Okay, so let's go from the kind of new world in AI, and maybe people actually should hear your thoughts on this more broadly. As we're debating whether this is a broadening out or a breaking down of the markets, do you have a vote to cast in one direction or the other, or do you sort of think that you were being a little too quick to call the end of the kind of Mag 7 run?
Kelly, we think the bull market continues and the path of least resistance is higher. So people have been, I've been in the markets a long time now. The whole time since we've been in this bull market from the lows in March of 2009, people have been worried about the end of the bull market. The S&P 500 is up 1,000%, 17% a year over that time period. So, but fear and pessimism have been strong. I would say we're in the later stages, but we don't see any end to the bull market. We do think there's a good chance we see a rotation and small caps, the laggards, do much better in the second half of the year as the Fed starts to cut rates and the earnings growth rate converges between them and the Mag 7.
Wall Street analysts, including those from UBS and Wolfe Research, maintain a bullish stance on Nvidia stock, highlighting ongoing demand for the company's cutting-edge microchips and processors. Nvidia recently unveiled its next-generation AI chips, branded as Rubin. These chips are expected to drive substantial revenue, following the success of the previously announced Blackwell line. Nvidia indicates a paradigm shift, vowing to release new AI chips annually rather than biennially. For now, Nvidia holds a towering 75% share of the global AI chip market, and with its aggressive new product release strategy, it's set to defend that fortress robustly. Wei Li, strategist at the BlackRock Investment Institute, said that AI innovation is not merely a tech trend, it's an economic seismic shift akin to the Industrial Revolution, and such statements add gravitas to the bullish sentiment and suggest that this is merely the beginning of the AI boom. It seems the pundits who are clamoring for the next Nvidia are akin to treasure hunters seeking a new El Dorado. They'd be better off acknowledging the riches before them. Shorting Nvidia would be like betting against the inventor of sliced bread while everyone else is still chewing on whole loaves. In summation, the rhymes of the stock market might change, but its themes remain consistent. Nvidia represents a confluence of innovation, market demand, and strategic prowess. With Ray Dalio's Bridgewater Associates betting big on this tech giant, there's a compelling case for individual investors to look closely. Nvidia's next quarterly results could be the catalyst that sends its stock soaring yet again, particularly as Wall Street analysts predict significant growth. Considering Nvidia's spectacular run and the unwavering confidence of reputable analysts, a near-term target of $150 per share seems not only attainable but perhaps even conservative. It's worth noting that Nvidia backers are not merely chasing after a trend, but championing a transformative shift with AI at its core. So, what do you think? Is Nvidia the golden goose in this AI revolution? Or is it time to place your bets elsewhere? Your portfolio might just thank you for making the right choice. Drop us your thoughts, and let's continue the conversation about this groundbreaking stock and its future. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.